All right, let's jump into it. Where we at? It's not the time. Where we at? 11:02. So 11:02 on the 15th of October. So halfway through the month now. And again, look, pretty much sort of fly through the news just because we haven't really got much going out. Like, there's not a lot much. There's not a lot of sort of local data, at least so far this week. We did have a bit of Aussie data out yesterday. We had what was it? The minutes coming out in the business confidence. This ticked up just a little bit, but did absolutely nothing in terms of actually impacting Aussie. Doesn't matter if your confidence is up, if US dollar's going to be running, then it's going to be slapped down. And obviously, we got that nice sort of break to the bottom side there. But short of that, nothing really sort of note. That I'm sort of really paying attention to. I guess we had the Claremont Council, which is the unemployment numbers. Is it change of people claiming unemployment? Yeah, benefits and that over in the UK. That was revised to 2,000. No, revised down. Sorry. Sorry. Yeah, revised down. So less people claiming unemployment. That's good. I guess a positive for them. And that that is just like sort of expected to go up, and that's sort of shot right up. So it's not looking too good for the UK over there. Actually, as I said, I don't really cover these bits of data so much, but but I mean, unemployment, that's a sharp sort of kick up over there, and unemployment rate at 4.8%. I mean, we're sitting, I think, in Australia around 4.2, I think 4.3. We've got the data coming out this week as well for us. 4.2, yeah, 4.2, looking to go to 4.3. Unemployment, employment, 20,000 for it there. So, yeah, not looking too good for the UK over there. Anyway, apart from that, sort of moving forward today, there's not a great deal that we had. We had Fed sort of speakers overnight. We had Powell, we had Bomen. Every time Bowman opens her mouth and that, it crushes that part of the market. Just bear with one, so just going to manage your position. Yep. Yeah, every time Bowman opens her mouth, she's always sort of harping on about sort of inflation isn't an issue and that, jobs are really still rattling and all this kind of thing. And the market just freaks out every single time and they're like, oh my God, yes, more cuts are all coming and that. And so you see US dollar sort of sell off there. And obviously by default, you see those sort of flows move into the metals. Um, we also had sort of Powell sort of speak. I haven't seen a great deal of what Powell said. From what I've sort of seen, I think they look at the Fed are sort of looking to sort of reduce their sort of balance sheet at the moment. So basically, sort of like not sort of like it's not like they're sort of like going okay stimulus and sort of like pumping cash out, but they'll sell bonds, and so then obviously sort of more influx into the sort of bond market and that. Well, you don't if there's more higher demand of higher availability of bonds, hence they're a large seller of them. Well, they mean like that has an inverse relationship with the yields. So they don't need to offer as high a yield because there's more bonds going around. So that's the inverse sort of relationship with it. So if when bonds are in high demand, well, you know what I mean, you can afford, you can charge a higher sort of premium for them, and the premium in this case is the higher yields. But if the Fed, who are obviously sort of, a big dog sort of selling, well, then it's got the inverse relationship, and obviously you don't need to offer such a high sort of yield for it, and we should see, well, could potentially see yields come off in that as well. And obviously, with yields coming off, that's weaker for the US dollar, and obviously positive for metals. And we've sort of seen that as the reaction. So we had a big sell off in metals yesterday at the end of Asia. And then, of course, sort of like pretty much since then, I'll get to this with the charts, but since then, gold's already sort of recovered or sitting around the 78% recovery line, sort of fib of that drop down. Silver lagging a little bit. It did pop up and reject very nicely from the 61%. Made two new lows after that, but since then is obviously recovering alongside Melbourne, recovering alongside gold there a little bit as well. So I'll get to that with the charts. In terms of data coming through today, though, we've got sort of a bit of China data. I don't expect this to be majorly sort of impactful with the market, but it's just something to sort of look at. Their CPI and PPI are very low, looking to sort of push it up a little bit. I mean, look, everybody's trying to sort of have some sort of level of inflation. I think 2% is just like the accepted target. These guys are in deflation. So there's a difference with this, a disinflation, which is sort of bringing it down from a high amount, and then below zero is actually deflation, which is not what you want. So they want to see that stuff move in the positive direction there. So I guess, I mean, it hasn't really sort of been affecting the yuan. The yuan's still super strong. It is testing its breakout levels, but just can't get above that 715 level that we've been looking at for a while. So that's fine. Get to that with the charts. Apart from that, again, not really a great deal of data coming out. We've got Empire Manufacturing looking to increase from a negative 8.7 from previous month to negative 1.8. Now, a couple of these ones have ability to sort of fly around so much, not so much as, sorry, the Philly manufacturing. Philly manufacturing will sort of be like sort of -5 and then +44 or something like this. That goes all over the shop. But we'll see how this sort of goes with it all. I mean, seemingly this would be considered something as dollar positive, even though it's in a negative number, it's still in a positive direction. So when it's already in a negative, you've got to kind of assume that that negativity is already priced into it because it's data that we know. It's not a massive, like, manufacturing numbers aren't going to like set the markets on fire, but it is something that could see a little bit of a sort of a temporary spike or a temporary sort of knee-jerk reaction in the markets there. So we'll have to keep an eye on that one there. But with the Fed still shut and still sort of in shutdown with no sort of real sign of them coming back at the moment, that's, I think, preventing US dollar from doing anything more spectacular. Gold's kind of the default for this, and it keeps sort of charging back up with it all. And of course, then we got sort of tonight we've got a couple of, well, overnight we've got a couple of speakers. Mirren and Waller are very dovish. I don't actually, no wonder I don't know this is GBP. So I don't know this speaker, and that doesn't affect us. We're looking at sort of Fed speakers. Mirren and Waller are both quite dovish. Mirren was the one that was brought in by Trump. Also the guy that sort of called for the 50 base point cut. Waller is another one of the original dissenters along with Bomen. So you can pretty much assume as they open their mouths and talk about stuff, they're going to be going on about how, inflation's not an issue. We're going to be saying, hey, look, jobs market is really going to be quite rattled and we need to sort of make sure we get ahead of that and cut early and all this kind of dovish kind of talk because remember sort of the focus with the Fed and also with like sort of with the RBA, they've got the what they call the dual mandate, in which employment is on one side of the card, so call that jobs employment, and then the other side of the card is the inflation. So they've both got very different responses. If jobs are going to turn out to be an issue, well, the Fed needs to cut probably sooner rather than later. And we know with that, that's obviously going to be weaker for the US dollar. If it turns out that jobs isn't so much of an issue, and then they've still got slightly rising inflation because inflation has been moving up, and plus we get inflation data next week, despite the lockdown. If we do see inflation sort of persistent and jobs not be so much of an issue, well, then it's the inverse reaction. You got to sort of hold your rates. You can't cut as quick as possible. And so then when the focus is on inflation, that's obviously going to be a little bit stronger for the US dollar. So that's why it's important to sort of understand sort of what these guys' stances are as to how the market's going to flip out. Because really, I've never expected it to move so much with these Fed speakers. I've never seen it, or maybe I've just never noticed. I don't know. But the last couple of months, woof, they talk and the market just panics. Anyway, we'll see how we go. So yeah, in terms of data, not a great deal. Let's go on to the charts. Start off, look, Aussie's here. We've got this one moving on. Aussie was a good one here yesterday, so I nailed this trade here. So this is what was like a little inside day that we had. As you can see, here's your big inside day being this. That, here's one. What the hell's going on here? There we go, third time lucky. Here's one part of the day. Here's one part of the day. The body's the open and the close, and this day here falls inside it. That is inside day. Inside day pretty much sort of like nothing's ever guaranteed, but it pretty much sort of leads itself to being a continuation day, just a little pause along the way. So it's obviously gapped up, unable to take that sort of positivity and run up higher. Closed in there, and then bang, boof, we sold down here. So that was a pretty decent little trade sort of coming through here. Popped out a little bit further than I would have thought, actually. Like I had targets down at 72, which were obviously the lows of last week. And once it broke down underneath that, another 30 points down to the bottom side there. But it was a fairly decent little trade here. We had a little early indicator of this sort of H1 close underneath 65.14. As you can see, backtest coming up here, but unable to break through that top zone there. So obviously sort of kept the short side in play. And then obviously once it sort of got down underneath 65.05, that was just straight meltdown kind of sort of status there. So this was sort of selling down prior to any of that sort of like it was. We were also seeing a little bit of a sort of weaker US dollar, just sort of confirming that. Yeah, a little bit of a weaker US dollar sort of through yesterday, and Aussie was already sort of selling down. Then we had that big metal sell-off. DXY sort of pushed up, and Aussie accelerated this next part down here. But as you can see, 12 o'clock, this is when Bomen was talking, and Bomen obviously comes out saying all these sort of like, jobs are the issue and we need to sort of keep cutting rates. And obviously that's weaker US dollar. And you can see the market reaction as Aussie pushes back up to these levels over here. So again, look, these guys sort of talking aren't necessarily sort of like, okay, boof, that's it. Hey, we're going to see the whole market flip on its head. But you can see a decent sort of reaction. Look at the size of the bounce of this thing. So as soon as that Bowman starts talking, over the next, 2 hours, you go up 50 points. It's a fairly decent little jump just from a few comments, which, could still ring to be not true. Like, you just don't know yet. We haven't got the data from the US, government and that in weeks now. So who knows how long that one's going to go for. But certainly at the moment, you can tell that this is still in a sort of downward trend here. We are consolidating the bounce here at the moment. A break higher, I don't see it sort of going back up over these levels. So maybe a retest up to 65.15 should it sort of go up over here. But at the moment, it's looking like it probably wants to roll over. And I wouldn't be surprised if we actually start to potentially range in somewhere around here, or possibly even down to 64.20 should we break these lows here. Should we break 64.20, this is going to be a bit, should we break 64.40s? This 64.20 is going to be the target, but that's going to be a very strong sort of little target, as very strong sort of support, which I don't think the market's going to sort of chew through pretty quickly. So it's going to be quite significant. So I still think shorts are in play. I think sort of like if we can get a close down underneath this sort of like 64.80 level, you could say, hey, there's a little bit of a target here. That was obviously Friday's close. That would be your probably first target / confirmation, and then underneath that you'd be targeting down to those 46 areas down there. We flip across to gold, and this is what I'm talking about. It's just bang, sells down. And so it's typical sort of structure. That's what I always talk about. You have your three moves. Move one, finds support. Move two, finds resistance. This is the important leg here, because this is the one that's going to tell you lower low, and bang, we're on our way. We're selling down, doing this. Didn't do that. The third option of these sort of things, so is a higher low, which means we're going to be in VO, which if you take the wicks, it did give you a higher low. Or you could just say, look, it was pretty much a double bottom. Pressure goes back onto this high and moves through. And now we're back into the structure moving up here. Found a bit of resistance. Support coming in at these resistance levels. Tackles those highs, back up over here. And as you can see, it just continues to dribble back up to the top side there. So it's quite interesting with gold because we've seen, if we put it onto, which one do I have it on? On this one. Nope. Let's see. I think it was on the futures. Yeah, so here we are on the futures. These are the sell downs that we've seen over the last couple of weeks, going back to was the 30th of September. So pretty much what are we at now? 15th. So call it 2 weeks. This is 1, 2, 3, 4 sell downs from high to low of the sell down. There's been around 2%. So around 1.8 to 2.8, and yesterday it was a 2% sort of sell off. And as you can see, every time, obviously we're in this big bullish trend, it just takes out the high and bang, it runs with it. This one was a little bit of a slower kind of move. This is around that sort of 3,900 period. But certainly, sell down. What's this? 1, 2, 3, 4, 5, 6, 7, 8 candles, and bang, it's back up taking out the high, and on it goes again. And pretty much, look, that's what we have seen here again. So this is 4 sell downs in 2 weeks, and that I think that sort of shows that, sort of given the right circumstances, like if we see US dollar run, the market's happy to sell this thing, but till we see it actually break out and run, and that probably won't happen until we get some clarification from the US government in terms of the data, the job data. It's still susceptible to just keep dribbling higher. I mean, this thing's just insane. I mean, if you look at this on a weekly, look at these weeklies here. It's actually expanding the higher it gets here. These are weekly, so to this one, to this one, this one, to this one, so on and so on. 2.4%, 3.1% or 3.2, 4.3%, 4.3%, and this is 4.3%. Did that in 2 days, remember, because this is Wednesday now, and it's right back up at the highs here. But this dropped down to 40.90, so around this point here. So bit of a wick, continued forward, bit of a wick, continued forward. Like we've had the sort of the new edition of China trade stuff pretty much from Friday now, and that seems to be sort of another pillar holding up gold. But again, this thing's expanding, expanding, expanding. Eventually, we will have one of these moves, and it'll come down here. We'll get a close, which I really thought we were probably going to get this yesterday. We're coming down, and if it still could happen, if we come to pop out the bottom around 4,000, get underneath 4,000. Actually, that's where we got to yesterday, wasn't it? Where did we get to yesterday? No, 4,100 we got to. 4,100, sorry. Losing my mind with these numbers, they're insane. 4,100. If we do get sub 4,000 and flip this and put in a nice big weekly top candle, maybe that can be the thing that we can say, hey, look, we've got a bit of a medium term high. But at the moment, this is just expanding out. This is not how charts work. This is how charts work. You expand with the breakout, but then you get smaller candles, and typically you see a little bit of a pushback, and then it continues to not break out, smaller, smaller, and then just bigger, 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 bigger. Like that's just, this can't end well, but it doesn't mean that we've come to an end now. That's the point. It's sort of like, well, it will end. I mean, obviously, eventually it'll end, but, does it go to 44, 45, 46? Does it go to 5,000? Who knows? I don't know. Like, honestly, this thing did 5% or 4.3% in 2 days. It is absolutely rocketing. But I think it's pretty clear, though, when US dollar runs, that's when we'll see a bit of a pullback over here. But till then, it's just looking like it's still grinding up higher and higher. Anyway, whatever, enough of that sort of going on. 4 hour, as you can see, it's trying. This pullback here, actually, one thing I noticed yesterday, this pullback through, this just is that little short trade we had last week, which was a great trade. Buys came in exactly where we thought, but again, same sort of thing with the structure. Sell down hard, move up, find resistance, move back down. Where did it come to? Same level. Double bottom, puts the emphasis back on this level here. Bang, breaks through, and away it goes up to the top side there. Just got a phone call. So look, you can't say it's anything other than bullish. This little stretch from that sell down here really only came back to 38%. You can So as you can see, this little drive up here from low to high, 38%, which we know is realistically a bullish continuation level of retracement. So look, if this thing's going to sort of cool down here at all, you'd have to get underneath sort of today's opens, which is around 40.40, which is now the 4 hour support for us here. If you did happen to get that, then obviously the focus would be back on 41.20. Underneath 41.20, okay, well now you've got a big wick up over here. You got a second big wick. So two big rejections with a technical lower high taking out that sort of support area through there. We could find ourselves in a large consolidation around these highs over here, or we could see that as a sort of move back down to the bottom side there. But for now, it's obviously looking very much like just the same sort of price action we've seen time and time again, recover, recover, recover. As I said, DXY is what I'm sort of watching for. It is sort of consolidating underneath its resistance zone. So it's not out of it yet, but till it actually breaks out, I think it's going to be pretty much gold by default. If we look on the shorter sort of time frame, and this is what I just sort of changed 2 seconds ago, here's your fib with your drop down, bang, it's back up above the 78%. It's actually just hit that sort of body fill of that candle there. So pretty much got up to the body fill, which, I like the body fill as a target. If it sort of closes above here, that's your confirmation that we're probably just going home, because all there is then is a wick above that. But pretty much we're exactly where we were yesterday, 3 o'clock, 4 o'clock, before we saw the big sell down. And we'll sort of see how this sort of goes. Silver, on the other hand, is lagging quite a bit. So yeah, we are sort of seeing this here. Let's put the alert synopsis here. And if that alert goes off then, so above 41.70, if that alert goes off, then we might sort of see something. If we get a sort of sell back down, this is the level that I'd be looking to get a close down underneath here. I don't know if I've got any alerts left here. Cool. Nope. Need to upgrade this then. So yeah, they're my kind of two levels that I'm looking here at the moment. Above sort of 41.70 or below 41.40. All right. So speaking of which, silver, as we've seen, look, that's where we've seen with gold. So gold's come right back up to the 78. So if you drag the fib here, you can see the comparison of the two. It got a nice little bounce at its time. That was the initial drop, 61% retracement, tested the lows, made a new low, and then look at this. You can see the time down the bottom over here, like at the bottom of this little grey thing, 12 o'clock. What happened at 12 o'clock? Bomen started talking, started gabbing on about how they need to sort of cut rates. I think that one of the comments was like, I still see 2 cuts to the end of the year. We're halfway through October. So, as soon as she starts talking, US dollar starts selling off, metals start recovering. Okay, that's great. So we know that that they have a strong sort of confluence at the moment. And I mean, they've always got a pretty strong confluence, metals and US dollar, but it tends to go in and out. Sometimes it's stronger, sometimes it's weaker, yada yada. But we can see that obviously as soon as US dollar started to sell off, as soon as Bowman started talking, Aussie dollar appreciated, silver appreciated. There's a pretty strong sort of correlation there. Anyway, if we drag it right down to its now bottom here, we're seeing it's being capped at 50%. So equivalent for gold, gold's back up over here. So gold's obviously sort of doing a little bit better than silver in this sort of instance. Now, where to from silver? So look at sort of, let's drag out a couple of these things. Could say there's a bit of a zone through here. Look, I think above that, I think that's the initial bounce high and shit. If you get above sort of 52.40, I would say, okay, boom, you're probably looking back up to the highs over here. I'd say that's your sort of you move through there. But the fact that it's lagging here a little bit while gold has sort of recovered up a little bit, and if gold does happen to sell down, well, silver's already been lagging a little bit. I think silver is a little bit more susceptible than gold in that instance. So downside, I want to see it underneath 51.60. Is that 51.60? Sorry, 51.20. Underneath 51.20, obviously you're going to be targeting these lows down here, like the sort of bounce lows from overnight. So that could be one of your little zones through here, because obviously this is where some buyers decided to step in. But you're starting to sort of be able to pick out some probably decent-ish levels. This was those previous wick highs kind of thing. Probably want to move this up a little bit. Yeah, so I'm going to chop that out over there. So I think they're the levels there, but still, give it a couple of cents either side of it all. 51.20, 51.30. I think underneath that's going to be your early indicator. You're going to be targeting 50.50. Underneath that, you're going to be targeting 49.70. 49.70, 49.80. This zone down over here, that's previous all-time highs. 50 years that sort of held for. So that's going to be the big sort of fail-safe. If you get down underneath this, then I think, okay, bang, we've got something going on. And I think that sort of we could see some deeper sort of corrections there. All negated, plus side 52.50 and then you can see it going back up there. Yeah, gold's actually just taken a little bit of a dip, $14 or so. It's just dropped off that sort of resistance zone. This is why I like that body fill. As you can see, look at this for a body fill target. Completion of that body fill, they hit it, and bang, that's a good sell down there. So they hit 70, now down 56. I mean, $14. Yeah, I remember back when Asia session was good for $5 to $10 for gold, and now it does it in like, oh, 4 minutes or something, 5 minutes, whatever. Anyway, look, a rejection from there kind of keeps the emphasis maybe back down around this sort of 41.40 zone. We'll see. Um, Tick along, we jump onto DXY because this is the big one that we're kind of looking at. So take this in two ways. One, you got a consolidation, a little triangle pennant moving here. So basically what you're seeing is the buyers are progressing up. So here are your buyers. Whoops. They're saying, hey, look, I'll pay a bit more. I'll pay a bit more. Boom, 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 boom. We're moving up. Now, sellers move down here. So technical lower high, that's fine. So they're moving down, the contrast to that. This is what I think is going to get us the big break. So we did see this sell off here. Again, sort of this is on the 4 hour, but let's see what time did we start to really melt down. Here. This is where Bomen started talking again. If you look at the bottom of the chart, you can see the time. It's 12 o'clock. That's when Bomen started talking. Yabba, yabba, yabba. Oh, okay, we're gonna have to see more cuts, and inflation's not an issue. Market sells off US dollar. Market buys Aussie. Market buys metals. Everything recovers. So you know that correlation is there. Um, Now, the fact that this is consolidating underneath the resistance zone, if you look at this on a daily, they're not giving up as much. I mean, look at this. This I think actually was another time that Bowman spoke. And look at the sell down bang there. And look, it's not going to happen like that every single time. I get that. But the point is that sort of like, they've been sell, 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 sell. This time, we're still seeing a little bit of a progression push up into this area here. But it's all predicated above getting above this resistance level. So above 99.50. Look, you're probably going to run into trouble up in this zone over here between 100.2 and 100. Body fill on that 100. I think this is an area in which we could probably see the market maybe correct a little bit. But if we do see that little bit of a push up there, it is going to sort of force a little bit more downside on metals. And we're going to see Aussie come down and test that 64.20 level. But think about this, it's sort of like Aussie is within striking distance of 64.20. Well, DXY, Aussie's not part of DXY, but DXY is also within striking distance of most likely what's going to be a fairly decent sort of rejection there. It doesn't mean it's necessarily going to come here. It could come down here because we do have that gap left from the other week. But if we do get a break above here, I don't think it's going to be the mega break that we get sort of moving out all this kind of stuff. I have put this little bit of a flagpole thing in here, but I don't really believe that. That would be giving you some sort of move to up around 100, 100 or 190, that kind of thing and change. But I'm not really sort of banking on that at the moment. What I am sort of looking for is if we can sort of see a little bit of a push up getting above sort of 99.20, that would tell me that, okay, we're still seeing the buyers, they're back in, despite the commentary, despite the lack of the news, despite the metal sort of moving up, we're seeing US dollar still being progressively bought up, and it puts the pressure on this zone over here. This is again going to be quite tough because now you've got body fill, you've got the 4 hour resistance, plus this falling resistance over here. So that'll be your sort of target for this little move here. Should we get above this 60, above 99.20, above 99.20, most likely see a rejection through here, but again, it just confirms that this consolidation is happening. Consolidation of this type, of all types actually, favors the direction that price moved into it. Price has moved into a bullish. Consolidation favors the idea, nothing's ever confirmed, favors the idea of continuation and breakout in the same direction in which it came into the consolidation. So would favor the idea of a move up to around 100 to 120. Move along, we've got copper. Copper got slapped. It's confirming this is a resistance zone. That's fine. We did have that sort of long-term rising support. very sort of loose kind of one there. But this whole area here, we kind of sort of thought this was going to be the sell down. We did get smacked down on Friday off the China data. Tried to recover yesterday, smacked with all the metals, and another one that just isn't really recovering a great deal. I mean, this thing dropped 6% on that stuff. Like that is that's a monster of a sell down here. But if you look at like just that move yesterday, 38%. That's all it's managed to do of recover that move last night. So you can see a little bit different, sort of like, metals will kind of move together, but obviously not exactly the same parts. We're seeing gold, sort of, 78% recovery. We're seeing silver, 50% recovery, and copper, obviously the weakest of the three there, 38% recovery, which favors a break to the bottom side. So should this thing not be able to sort of rally and pick itself up back towards 514, break below sort of 497, you're probably going to look to sort of at least take out that sort of Friday's lows, close that gap, because that would be where the gap would be, because obviously it closed down at this 4.87. But realistically, I'd say that's enough for it to sort of dribble back down towards 4.7, which again is going to be another thing that goes in line with probably a little bit of a weaker Aussie moving forward. And finally, just with China, geez, this thing, which, look, at least it is respected the price action that we kind of called for. This was the inverted head and shoulders. Yes, okay, great, bang, we've got our measure move. And look, this is still somewhat valid, even though it's got a wonky double shoulder over this side. I said, look, if we can't break through this level here, most likely we're going to see a range. And this is what we're seeing. It's starting to make a sideways range here. So I think this is what's going to give us our direction. So your fail safe line, look, obviously major fail is down here, but I would start to say if you started to close underneath 7.11, 7.115, whatever, these lows here, that gives you a close underneath this very long weekly time frame rising support, and I think that could really not be good for things. I think sort of US dollar really back to DXY, back to the lows, gold 4,400, whatever. Should this thing push up over here, I would expect Aussie to be pushing back down. I'd expect obviously a little bit of weight to be put onto metals as a whole as well. So that's another thing that potentially I'm sort of holding a candle for, is this break above 715. We got two attempts here, well, actually three attempts yesterday as well. They got up there and touched it, that 715 area. So we know that this is a crucial level for them to get above. And if they can get above that, 715 or 7155 technically now, then we can see that move up there. And I think that's where we're going to see US dollar potentially run across the board a little bit, which will be weaker for gold, weaker for metals as a whole, weaker for sort of Aussie dollar as well. All right, that's it from me.